Hello and welcome to the Pinnacle Financial Scribble Series. I'm your journey's host and financial disruptor, Adrian Harasymiw, wealth builder at Pinnacle Financial. Let's get this scribble session rocking as I focus your attention on the second of two common terms used by investment connoisseurs the world over, the short position. This will be a quick look under the short hood, just enough to give you a better handle of what it means. Okay, so the short position. While yes, it is the opposite of long, and so it does mean to sell, in the world of investing, it's not simply about shorting a position you already own. You can actually also short assets you don't own. What sorcery is this, you ask? Well, here's what happens. In going short a stock, for example, you're borrowing it from another owner and then selling on the exchange at the going price. You're intending to buy back the asset at a later time at a lower price so you can make the lender of the stock whole again while pocketing the difference. But note that being short on a position obligates you not only to return the asset at some point in the future, but also to pay income generated by it in the meantime. So if you've sold short a stock, which pays a dividend while you're short, you're responsible for ensuring the owner who lent you the stock is paid the dividend, even if the amount needs to come out of your own pocket. And why would someone go short, you ask? For investors who believe an asset will depreciate or drop in value, they will pursue a strategy of shorting that asset. With that, let's make this a bit less complicated and look at an example. This time we look at Larry's Lemonade Stands Corp., which also issues publicly traded companies. It's wintertime, so I'm not very confident that Larry's is going to do very well in the next few months, thus affecting their stock price. Their stock is presently trading at $10 per share. I think that's too high, so I decide to go short and sell 300 shares, thus netting me $3,000, which I can do with as I please, at least for now. In 1 month, I checked the stock price and it turns out I was right. Now the stock is trading at $6 per share, so I decide to close out my short position through the action of buying 300 shares on the exchange at $6 each. This transaction to buy the stock cost me $1,800. As such, once all is said and done, and ignoring holding and transaction costs, I have profited $1,200 going through this process, or generated a positive 67% return. Now before moving on, a couple things to note first. Same as with long, in a short strategy I can say such things as I'm short 300 shares or I have gone short 300 shares. Both mean the same. Also, when borrowing the asset to be shorted, you don't actually need to know the lender of the asset. I mean, you don't necessarily need to go and find someone to lend you that asset. Such is the case in shorting stocks. So in going short some assets, this transaction isn't as complicated or difficult to execute as one might think. But now, before you get too excited about this new magical power you have unearthed, let's make a small change to the example to expose the risk of such a strategy. Let's say 1 month from now, I was wrong in my assessment and the price of the stock has risen, now trading at $18 per share. I see the errors of my ways and decide to take my lumps and get out of the position. So I buy back the 300 shares at $18 each for a transactional buying cost of $5,400. Anyone quick on the math will notice that I have now lost $2,400 of my own money for a return of negative 44%. And herein lies the risk. My gains are maxed out when the price of the stock hypothetically reaches $0. At a price of 0, I pocket 100% of the $3,000 I initially received. But my losses could be limitless as the price to buy back the stock could theoretically rise to infinity. At what price do I exit? $100, $1,000? So now I'm buying back the stock for what? A total of $30,000, $300,000? As you can see, the risk here could quickly spiral out of control. With that splash of reality in your face, time to close out this scribble session on the term short position. Don't get down on yourself. This power has great potential, but great responsibility as well, as do many other financial concepts. So be sure to subscribe to this channel before dashing off today so you can quickly find your way back to more Scribble Session tidbits. And don't forget to head over to www.mypinnaclelife.com, where I'll send you your very own My Pinnacle Life notebook to store all these nuggets of information in, with your own writing flair, of course, once you join my free weekly Pinnacle Chronicles email list. By the way, this short concept is not known by many people, so don't be shy about sharing it with others to help them get their head wrapped around it as well. Now it's time to get your skin in the wealth game and on your way to the pinnacle.